Yeah, we are satisfied with the results. It's certainly a pleasing set, and it wasn't easy because market conditions were really difficult, particularly in the logistics business when everything came to a standstill about a year ago this time. But what we saw is that our management teams acted very quickly, rationalized and cut costs very quickly, and just sort of rearranged things to be appropriate for conditions as we were in, and that was done early on. And then also the major restructuring that we did 2 or 3 years ago with certain unbundlings and selling of the aviation business and so on proved to be very timeous. Then our products that we sell, the retail products that we sell in the motor vehicle market, have proven under current conditions where people are very cost conscious and where people are buying down, have actually proven to be the appropriate products for this time. So that's helped us.
You've been restructuring over the past 2 years, and just taking a look at a company such as Equestra, which you unbundled recently, just proves that it's a very cyclical business and you got out of that company just in time. What do you plan to do going forward with some of your divisions that are not operating as comfortably as others?
Yes, the decision at the time was to get out of capital-heavy businesses and that we don't play bank for anybody. That's also what the aviation leasing business was about. That's also why we exited our interest in Imperial Bank. So we wanted to get out of capital-heavy businesses. So we will stay lighter in our mix, in our capital mix of the businesses which we are in. But we're satisfied with the actual range and the portfolio as we have it now. And the biggest growth driver from an investment point of view, maybe acquisitive point of view as well, is our logistics business, just because of the sheer size of that industry in South Africa and in Europe, where we also are quite a meaningful player.
You mentioned that you are interested in acquisitions, particularly in the logistics area and tourism area. Give us some insights into your plans. What kind of businesses are you looking at?
Yes, the key acquisitions in logistics, and sometimes also asset-lighter logistics, not only the trucks and the warehousing, but also the services that go on around logistics. And we've made a couple of acquisitions even in this tough period. We've bought a business by the name of eLogics. We've bought a business by the name of Pragma, which is a physical asset manager. We have a 35% share of that business now. And also in the tourism business, we would acquire businesses that neatly augment our current position as an inbound tour operator. So businesses that actually fits with that and extends that value stream, that we can get a few more bites at the cherry in the tourism life cycle is what we'll look at as well.
Your gearing is down to 50% from 75%. What kind of levels are you going to be comfortable with?
Look, in fact, our gearing will go down further because we still have not received the 1.8 billion on the sale of the bank. That will come in over the next 6 months. So that will have a further impact on bringing the gearing down. So that gives us significant headroom. Ultimately, the gearing range that we look at is between 60 and 80%. So we have headroom to make capital investments for organic growth and for acquisitions.
Both a strong and a weaker rand impacts your business this time round. We saw a foreign exchange gain of 394 million rand. What is it like balancing the two at this stage? We know that the rand has been relatively volatile over the last while.
No, the foreign exchange gains were actually in the previous year. They were not in this year. So that's in our base. This year we had no foreign exchange impact of any significance. So there's 394 million rands. Last year, when the rand was particularly weak. This year, the rand was a lot stronger, so the translation of our European business actually slightly muted the performance of that business. But the currency helped us in our local distribution of motor cars. It helps us to be able to price just a little bit of aggressively and to edge up in our position in market share. So we're an interesting company in the sense that we're stronger with a stronger local currency, which is not very typical of industrials in South Africa.
The new Industrial Policy Action Plan has included the automotive sector. How do you plan to benefit from the new IPAP? And also just tell us in terms of capitalizing on the new prospects and the kind of incentives that you'll be seeing in this industry.
It will surely benefit us. The automotive industry is a major client of us in inbound logistics, in logistics on the manufacturing floor. And we also distribute aftermarket motor car parts. This is now to the market outside of the space of the motor manufacturer when a car is older. It's a big market. There'll be a lot of focus on manufacturing of those products in the domestic economy, and through our recent acquisition, Midas, we're well positioned there.
Revenue from your automotive retail unit came down by 7%. We are seeing growth in the vehicle sector. The average for the month of December and January at around 5%. We know January fared far better than the month of December. In terms of when you see the positivity feeding through into Imperial, when do you expect this to happen?
We believe that motor vehicle sales will gradually improve this year, both passenger cars and light commercial vehicle sales. We think that there's a gradual recovery, also because banks are slightly loosening their very tight credit criteria that they had most of last year. So there will be a pickup in new car sales. Maybe the new tax, the levy, the carbon-based levy, might have an impact on the sales of more expensive cars, but the more economical cars and naturally used cars will benefit through not having such a big levy on them, and so that sector where we're well positioned will benefit.
You're not defleeting this winter, no surprise. We've got the Soccer World Cup, which will be held in South Africa between June and July, and in fact you're increasing your fleet by 20%. Thereafter, are you not going to be sitting with excess capacity? Are you planning to move the excess fleet towards the second-hand market?
We are not defleeting. Over the space of a whole year, we're not defleeting more than we normally do. We will just be defleeting later, whereas we defleet normally in April and May, we defleet afterwards. So the number of cars going into the used car pool of South Africa and that's available across the economy for the whole year is not much different from what it was last year. It is just delayed somewhat. So we would rather say there's going to be a shortage of used cars in the earlier part of the year, and maybe that will strengthen margins.